Welcome to Hercules Trading. Today I'm very excited to introduce you a new product adapted for the stock market, in this case mainly for the US stock market. It's basically an adaptation, we can say, or improvement of the previous one which we have, which is the high and low channel, which it was mainly made from the VIX index volatility. In this case I decided to combine it as well with the gaps between the sessions from the day sessions, and at the same time I am looking into different patterns of analyzing the volatility and the relative volume, especially within a certain time frame, mainly within the opening session, and also in a moment where it's like the close session of the London market. And yeah, let's go more into the details, and I'm going to explain step by step on the road. So basically, in this case, the script is adapted for two time frames. We are going to use the 30 minutes time frame and the 60 minutes time frame. Initially, as a data for calculation inside, I'm using the QQQ ETF for the Nasdaq, and then for the data for the testing, in this case, I'm using the CBO VIX. However, in this case, you can also use VXN or VXD, which is the volatility index of Nasdaq or volatility index of US 30, DIA. However, you have to take into account, like for example, if we go into VXN, that this type of data is with delayed, so you need to pay for it. And the other one as well, the VXD, as well, it has delay, so you will need to pay for it. So in this case, the only free one which we have is going to be the TVC from VIX. So this is what we are going to use. So in this case, if I'm going to put here VIX and I'm going to use TVC from VIX, this is what I'm going to use if you don't have any paid type of data when you are going to create the alert. However, for the testing, in order to make sure that this thing perform accurately in the previous years, and we are going to gather as much amount of data as possible, in that case, for example, you can use the default, which is going to be the CBOE data. And you can see that in this case it's going to allow us until 2018 with 30 minutes, almost doubling our amount of trades. So yeah, regarding the strategy logic, like I said before, we are going to make use of the VIX data. So in this case, for example, if I'm going to go into the VIX, you can see that in this case, for example, is 16.44. So with this value, what I'm going to do, let's say for example, we are here. I'm going to take a special formula, which is going to be SQRT of 365 divided by the amount, in this case, which is going to be 16. So let's say for example, I don't have a calculator right now, but probably. So let's say for example, in this case we have, like I said, 365 days, and we are going to divide this by 17. So now I'm going to make an SQRT of 21. So in this case, if I'm going to take few calculator scientific, and I will take 21, and I will do root of it, you can see that it's going to be 1.15. This is what's telling me is that within a day, so like we said before, so if we go back on this on the VIX, it's telling me that right now it's 16.5. This is telling me that in a period of a year, so like if I'm going to go one more time in the SPI, if I'll go for example and I'll use a year candle, it's telling me that from this point where we are right now, it can go 60% upwards, so until here, and 60% downwards until here. So more or less, this is going to be the range, where this asset can be 1 year from now on. Okay, so now that we have established this, we can move forward. I had to put this, you know. So yeah. So in this case, when we are going to translate that for a day, it's going to give us this 1.37%. So probability is going to be up there, or you know, up there. However, I'm going to divide this value even more further, and I'm going to adapt it for the 30 minutes time frame and the 1 minute time frame. So with these values, which we are going to have from the VIX, I'm going to create a similar band like with the Bollinger Bands. So when we are going to overpass this above or below, we are going to use literally the same logic like with Bollinger. When it's going to be above, it's going to be a long entry. When it's going to be below, it's going to be a short entry. However, on top of the VIX calculation that we have initially, I'm also looking for the gaps. The gaps in this case are, you know, this jump of data from the end of a session, end of yesterday's session, for example, and today beginning of the session. And sometimes you can see like we have these huge gaps. So for example, this can be an upper gap, or for example, in this case, if we are going to check here, this can be a lower gap, you know. So I'm also looking into account, you know, for these gaps. And on top of it, I'm also looking, you know, for explosions in the volume. So for this, I'm going to use the relative volume. So let's say, for example, in general, let's say at this period of a time, most of the times, you know, they are being bought, let's say 1,000 shares. But I'm using a positive relative volume. So in this case, I want a value which is going to be above these 1,000 shares, you know. And at the same time, the other thing which I have inside of it is that I also have, I'm making use, like I said before, of a time condition. So in this case, I'm using especially, you know, for beginning of the, you know, beginning of the session, I'm looking that there is an upper gap or it's a lower gap. And if that situation has been confirmed, then for example, I'm going to use for that explosion on the Bollinger Band. But in this case, the Bollinger Band is being calculated with the VIX value. And as a third factor filter, then I'm going to use, you know, the relative volume. And also another one, like the fourth filter which we have inside, it's also I'm using, you know, the volatility filter. So in this case, I'm checking the percentile, where is the current VIX according, for example, to the last 30 or 90 days. 30 for the 30 minutes and 30 days for the 30 minutes and 90 days for the 1 hour chart. So yeah, I would say more or less this is the logic. Now regarding, you know, the results, I would say from all the strategies that I have developed so far for the US market, I would say this is the safest one in terms of the profit by drawdown. And like I said before, it's mainly adapted, you know, for the technological US sector, in this case QQQ and XLK. However, it can also work with the SPI correlated assets, because QQQ and SPI, they are 80-90% of the time, you know, they are correlated. So it's going to work with that, and of course with individual individual assets as well. So like for example, these are going to be SPI and QQQ. We can also make use of the leverage indexes, you know, for this one. So for example, TQQ, which is the 3 times, it's 3 times leverage the QQQ, the Nasdaq ATF, and then for example you can use SPXL, which is 3 times the SPI ATF. And then, like I said before, we can use the normal stocks as well, like for example Nvidia, Microsoft, Apple, and you know, whichever other stocks, but preferably, you know, blue chips that are mainly correlated, you know, with the US 500 index or with the technological index. Or also, if you want to trade directly, you know, by the sector, you can also trade directly by the sector, mostly with the financial and technological. You know, you are going to have, I would say, the best returns. You know, the proper thing in this case, it would be, of course, to diversificate and to make, you know, an average order between all of them. Now, like I said before, we have 2 logics inside of it. One is going to be like safer, the other one is a little bit more like a bit more aggressive, but also, you know, like a swinger. It's also, you know, taking into account that it's going to give much more history and more trades, you know, it's giving we can take the condition, you know, that it's much more accurate and much better suited, you know, for the forward trade. So in this case, it's going to be the 1 hour version. However, I would recommend, you know, to use both of them and diversify between both of them. So in this case, for example, if I'm going to go with the 1 hour, you can see that now in this case, we're going to have the data from 2013. And in terms of the results, like for example, one more time, if I'm going to go into the SPI, we can see that in this case, the annual CAGR, it's around 21%, and the drawdown, it's around 10%. And if I'll go with 30 minutes, in this case, in this case, if I go with 30 minutes, you can see it's a little bit better. So in this case, it's going to be 23% CAGR, but also the drawdown, you know, it's much smaller. So yeah, it kind of makes sense, because in this case, we are going to have the period within the trade is going to be definitely shorter, you know, by using the 30 minutes time frame. So yeah, it makes sense overall that it's going to give better return and less drawdown. But like I said, it can come with a weakness that, you know, it can become overfitted, or the cycle, you know, for which it has been adapted, you know, it can be much more easily manipulated, and it can lose the edge, you know, that it has. That's why it's best to continue with them both and test them both. Now, in terms of the, yeah, for example, I can show as well before that the results with the 1 hour. Always, you know, make sure that there is only one logic applied here. You know, regarding the settings, I think I leave it, you know, currently like this. You know, there are no optimization that needed to be done into it. So we can see that in this case, for example, QQQ has a 27.5 and a 16% drawdown. And if I will go with 30 minutes, we can see that in this case we have 29% and 8.7% drawdown. So yeah, very good results overall for both of them. How to set up the alert. In order for the setup of the alert, like I said before, the main data which we use beside, we can see from here, it's from the QQQ. So we are going to use the QQQ chart. Now, if you are going to have a paid data, you know, for the VIX, and it's not going to come to delay, you can know that, you know, by checking, you know, this icon from here. So in this case, for example, if you have the paid data from the VIX, it's going to appear like this. Otherwise, if you don't have it paid, you can just use the TVC VIX. This is the free one, so you can put here TVC VIX. You can see that in this case, so if I go into the VIX, you can see that, for example, in this case, the data is free. But for example, if I use the other one, if I use VIX from CBOE, you can see that it's with delayed. So that's why I would recommend, you know, to use the one which is open. Otherwise, you are not going to get properly the alerts. So yeah, so we go on the QQQ. We set up, like I said, TVC.VIX. So now with this in mind, so yes, we are on the 30 minutes. We are going to create. So within the messages, we are going to have here the syntax code, syntax long entry, syntax long exit, you know, and so on for the long and for the short as well. Once we have done this, we are going to create the alert on the strategy, and within the strategy, we are going to have to write strategy dot order point alert message. I think it was like this, if I'm not mistaken. Yeah, strategy.order.alert /message. So in this case, for example, it's alert gaps VIX 30 minutes. So when we are going to do this, you are going to receive here with one alert is going to you are going to get the output, all the messages which you have put, you know, within this place here. So yeah, and I would recommend to do it this way. And also, for example, let's say you want to use SPI or other assets, I would recommend, you know, to create the same alert you created on the QQQ, and then within the message, like for example, this is from QQQ, right? So within the same chart, now I'm going to create so although I would recommend to create another chart, but imagine, for example, I'm creating a new chart. So in this case, for example, now it's going to be SPI alerts. No, so then as well, I'm going to create a new alert, and I'm going to use the second strategy, and I'll put strategy that order that alert message within here as well. So in this case, let's say alert 30 minutes SPI. So yeah, but like I said, instead of doing like this, you will have to create, like you create a new chart. So you can do this, and then the same, for the 60 minutes and the other assets. Yeah, I think it's more or less. I think I tried to cover, the most important details. However, if you have any messages, you can always hit me up on the Telegram or on the Discord or even the YouTube itself. So yeah, on the trading view. Yeah. Thank you all for watching, and I wish you all a nice week ahead and best of luck. Cheers.